All right, guys, we're starting a recording of our London session, and we were just going over some stuff that we had from yesterday, some targets and everything like that. We had the EUR CAD. We given some updates on that, but I want to go and start doing a little bit of education Wednesdays and Fridays, and we're going to start going into that. So um, we can go into what would be some of the thoughts. What would be the entry? The entry right down here for the NZD USD, Michael. And the targets, you look it up here for targets. So let's just see how far it goes first. What I'd like to see is this hold. And once it gets profitable, then we can look at where targets are going to be. Like right now, Michael, for the EUR CAD, you have a break-even stop loss. You're exiting half of the trade that we put on yesterday, and you're sitting with no loss right now. You're sitting with a full profit, all right, and a break-even stop on your balance. So that's what I'd like to see the NZD get to. So if it continues to stop to go lower, you're risking around 2%. So I do want to look at these different markets and see which would be the best. Okay, we looked at that. Okay. So just give me a second. I want to see if I can get my other screen on without a flicker. You can exit half, basically, Christina. Let's for example, uh, let's just say you bought something, for example, here. Okay. View terminal. So let's just say you bought. Okay. All you're doing is going down here. You bought one, for example. You go down here. You modify. All right. You're modifying that. Actually, hold on a second. Yeah. Here we go. Pending instant execution. And let's just say you want to do half of it, okay? Half of what you have. You're going to close it. And what it does, it brings you down to half. So one more time. Let's just say you bought half. You right-click, modify or delete, instant execution, and let's just say you want to get out of half. You see? Close. It brings you down to half. That's how you do that. Okay? Fantastic. Had a great webinar with Christina last night. So let me take a look and see what we're going to do a little class on tonight. I think we'll do a beginner class. Guys, do you want a beginner class? Something very, very beginner? Um, would that help? Okay, how about setting up charts? Would you want to do that? Well, okay. Yeah, let's do charts. Let's set up some charts. I'll have this recorded. And we'll do buys and sells. Now, those of you that say no, we agreed we're taking on Wednesdays, right? First 45 minutes to an hour. We're gonna do we'll do this, and then we'll look at the scanner and we'll look at other stuff. But we need to do a basic class because I see, and you guys don't, all the people that are having the excitement but don't even know how to buy or sell. So let's get you to where you know how to buy or sell. Let's get you in how to even make a chart. Okay, so when you turn on your system, when you first turn it on, okay, we're going to do this. So in terms of setting up a demo, you can do FXCM, you can do Trader's Way. There's so many different companies out there, but I can't download it for you right now. That I can't do. You're here because at least you know how to download a platform. All right, and I'm sure they got steps for that. But normally when you put your charts, when you first put your charts on, you have 4 or 5 charts. They're black and gold. But let's do it where we're going to get rid of, you go and get rid of all the charts. Let's just say you get rid of all the charts. I have to leave this one because this is our trading platform one, right? Our harmonic scanner. You click here where it says new chart up on the left. Okay, we're going to do all that. I'm going to go through everything. Watch what we do. So we're going to go through new chart and click any of the symbols here. EUR, USD, anything. I'm going to start with that. All right, so this would be your foundation for your new charts, your new platform. And because you're new to trading, you want to have it so basic. You want to at least clean this up a little. This is how I like to do it. You don't need all those grid lines and all that. So what you need is, let's just clean it up. So you right click on the chart. So let's do this again. You turn your MetaTrader on. You have blank space. We're going to pretend this isn't here. Get rid of all your little charts. File new chart. Pick any symbol. Euro USD. Doesn't matter. So I'm going to show you how to save templates and everything. Number one, right click properties. Uncheck grid. You show your bid and ask line. That's open, high, low, close. You can show your ask line. I like keeping that on. You go to colors. Now I'm recording this, guys. You go into colors. Very simple. Background, I like to do white. You can do any color you want. Foreground, I like to do blue. Grid, it doesn't matter. We can do none. Bar up is blue. Bar down is red. Bull candle is blue. Bear candle is red. I don't need anything else at that point, guys. I really don't. You have a basic chart here, and right up at the top screen, okay, right up here, you can open this up a little bit, and you have your price bars. These are called price bars. So you can have price bars, or you click here right at the top, and that is a candle, or you could do a line. Some people like to just use the line. That's fine. Some people like candles, and some people like price bars. This is solely your choice of what you like. I'm not big into candlesticks. I only like them because they're fat and I can see them. All right, that's basically it. It's not. I started using them in 2002, and I just thought, you know what, they're fat and I like to use them. That's essentially what it is. I'm not big into these dojis and all that. I think it's it's a personal preference. But to show you understand what they mean, I want to spend a little time real quick and just show you what everything means here. So on the bars, okay, right here, the open, high, low, close bars, let's just go through this. So where you have, and based on my chart, blue up, red down, you have the dash to the left. Dash to the left is open. Dash to the right is close. If the dash to the right is higher than the dash to the left, that means it went up. If the dash to the right is lower than the dash to the left, it went down. So in my case, the blue bar, dash to the left is the open, dash to the right is closed. That's an up bar. Dash to the right, to the left, and then the dash to the right is lower. That's a down bar. Now you have it's obvious, right? You have your low and your high of the bar. So here's your open, high, low, close. Simple. Open and the high are almost the same, low and then close. So this is what they call price bars. Now I'm going to go a little further, and I'm going to come back to this. When you draw your trend lines, you're always looking to draw them point to point. Okay, top of price bar to top of price bar. All right, top of price bar to top of price bar. That's true technical analysis, is where you're putting your trend line from price bar to price bar, the highs. Okay, doing something like that is okay. Doing something where it's you're putting it in here like this, and you're considering that this a legit trend line where it's poked out and all that. That's not really good. Hakan Taruk says, "Put the candles on." Hey Taruk, this is my house. This is my house. I'm gonna get you to the price to the candles, brother. Just hold on. All right, I gotta teach you one before I teach you the other one. People go right to the candles. They don't even know what they're looking at. So let's do one at a time here. So now we're going to go to the candles. So how do you get that line? Okay, don't worry about all that yet, Michael. I'm going to show you how to do the trend lines, all that. Okay, I'm going to get there. This is candles. All right, so you put the fat price, the fat little thing right there. You click on it, and a lot of traders think that it's okay to put the. Oh, let's get back to that. Let's get back to this. So candles. How do you read them? Let's read the candles. Okay. So here we go. Blue bar up. Okay. On a candle where you have the fat part here at the bottom. All right. People are happy with this. I see everybody's happy with this. I like that. All right. We're doing the right thing. So when you look at candles, the fat part of the bar is here. That's the open. See where it closes higher. That's the close. You see that? On an up bar. Okay. On an up bar. And you know it's an up bar because the next bar is higher, right? So on a blue bar, the way we designed it is you want the blue to be bullish, the red to be bearish. This is the open. The fat part is the open. The fat part is the close. And then what they call the wick, or the high and low. Low, high. So you ready? Open, high, open, sorry, high, low, close. So open is the bottom, close is the top, doesn't matter the bar, low, and then high. On a down bar, right here, open, close, high, low. Sometimes you will have the open and the high at the same price, and then you got your low and then your close. That's just the way the ball bounces. Sometimes your low, your open, your close, and a little bit of a high. These are called candlesticks. Again, I don't get into all the jazzy names. I know Steve Nissan, who's pretty respected out there. He's a big candlestick guy. If you want to learn anything about candlestick, you go to Steve Nissan. Steve Nissan. He's the authority on candles, okay? He's the authority on candles. I'm drinking some water. Water is good to have when you're sitting here chatting, right? Okay. So the other thing is when you draw a trend line, I just want to bring something up. When you're drawing a trend line, you go from wick to wick. I know some of you guys, before I go past the candles, you're going wick to wick. A lot of times you'll see traders do body to body like this. They'll think that where you're going through the body is normal. That's not a trend line, all right? Always make sure this is not a trend line. If somebody does something like this, that's not a trend line, okay? I'm going to get to how we add the lines and everything, okay? I'm going to get to that, all right? I'm going to get to all that. I just want to make sure we got the basic chart set up. So right now you have a basic chart. I just wanted to highlight that little note there when it came to candles, because I'll forget. I got other things in my brain, right? Because I want to get you guys forward here. So your basic chart is, this is your chart. From here, you really don't need anything else. You really don't. However, indicators are a great crutch. I suggest starting off with maybe some moving averages. Nothing wrong with that. Maybe a moving average or two. So we're going to do view, navigator, and this is where you have all your moving averages, Joe Blow. We have all your moving averages, all your indicators, all of that information is right here. To keep it simple, let's just take a moving average. You take the moving average, you left click, and I'm showing you how to move stuff over. You left click on this. So how do you get there? One more time. View, navigator. All right. So moving average. Can I give you my account to take over? I don't want your account. Hold on the left and drag it over. And you're going to see this. I like to do a 20 period exponential. So I'll put that there. I also like to do a 50 period, and I'm recording this, guys, so don't worry about it. It's already on record. A 50 period simple. I would use a little bit of red. And then I like to do a 200 period simple. And we'll do another color. All right, so the thing with MetaTrader 4 is you right-click to do some editing. So we're going to right-click on the actual property right here on the actual symbol. You could delete it if you want, or you could change something in it. You actually can pull down the button a little bit here. You pull the menu down, maybe make it thicker. And now you got a 200-day moving average or 200 period moving average. Then you got this next one, right click. And let me make this a little bit fatter, but not so fat, okay? Well, maybe we did. It doesn't matter. Okay, so nothing wrong with some moving averages. There's also the MACD, which I like to use. So we left mouse click, you hold the mouse down, you hold the click down, and you drag it over to the right. And it has its own information populated already. And I go 3, 10, 16. Okay, this come down from a guy. Originally, his name is Daniel Brescher, Walter Brescher, who brought it into the 1980s. My former partner, Linda Raschke, actually made them very popular. And she was my mentor and everything. So right there. So for those of you who like to use MACDs, that's fine. Okay. Now, I will get into all that, what it's for and all that. So let's discuss what we have here so far. You have your charts with the blue up, the red down, the candle, or you can use a price bar. I like to use candle. That's just what it is. I'm going to get to everything, guys. You don't have to ask questions. Don't worry about it. I got you, okay? The second thing we did was put moving averages. We have a 50 period, a 20 period exponential, a 50 period simple, a 200 period simple. The larger institutional traders like to look at these higher time frames when they're looking at daily and weekly charts. Now, hold on a second. Somebody's asking, where do we find your recorded videos? Chris, and because his name is Chris also. And then I got Jake asking questions. Guys, focus on what I'm doing, okay? Don't worry about all that. Let me finish what we're doing, okay? Then you can ask questions. So, and I appreciate the questions. Just let me continue with this so everybody's focused on the same thing, and so am I. Okay, yeah, just follow, guys. Then you have here what we call a 310 oscillator. And somebody's asking, what's the purpose of the 310 oscillator? The 310 oscillator basically is an MACD, and it helps define where you have momentum in the charts. Maybe you have some momentum going on. Maybe you have some impulse to the downside. You get the low on the oscillator, the MACD, that correction up. You get that little correction that sets up an area because you'd like to sell it. So when you see an indicator going sideways like this, and I did this on purpose, when you go sideways like this, and you have a sideways market, okay? And that's for those of you who have experience. When you have a sideways market, you don't want to use the MACD. An MACD is virtually useless in a sideways market. Really where it's made, where it has value is in a market that is moving, all right? Not in a market that's not moving, all right? So you got a break from the highs, little retracement up, and you have your little oscillator. Somebody asked about the bear flag. Was that a flag? This is a flag right here. Here, here, here. All right, somebody had asked about a flag earlier, and we talked about that yesterday. The thing with the oscillator is this coincides a lot with those type of patterns. So you have impulse to the downside, your MACD is going down, you get a consolidation up, you're looking at the short side, you got a bearish flag, and then continuation down. So somebody had asked about the bear flag, so I saw that. All right, so you basically, all right, so we had looked at the NZD USD for a buy side. We'll see if this goes higher, you know, who knows. So anyway, right now you have your MACD and your charts. Now see here, the MACD, you can right click, all right, right click that. And let's just say you want to make that thicker. And we did that right there like that, see? So you have it where you can see it a little bit clearly. That's up to you. However you want to do it, whatever makes it work for you, that's important, all right? Not everything works for everybody else, and whatever works for you, then so be it, all right? You can adjust it to your liking. So where you have this breakdown, a little bounce, watch your MACD. You may have a little reaction up and set up a short. So right here on MetaTrader 4, you see the line. You can make this like this, purely up to you. Up here on MetaTrader 4 also, you have these buttons. This button makes things wide. This button closes them up. Plus, minus. You have these buttons here. So you can press this button. You try to move it. It doesn't move. There it goes. All right. I typically like to have both of these little buttons pressed. I leave it here, and it works for me. Sometimes I'll bring it over. It's up to you. You know, I just keep them both pressed. Now, each of these buttons right here, guys, and we're doing a beginner's class for those of you that have just been coming on. We're doing a beginner's class. Somebody's asking, how do you trade the iPhone for the MT4 app? Hey, Clint, Google it. I can't tell you about that. I'm trying to do a little class here, my brother. So right in here, we got M1. This means 1 minute chart. And somebody says, well, what's a 1 minute chart? Well, I'm going to tell you. Let's click here. Each bar is 1 minute long. It takes 1 minute to complete a price bar. See, watch this bar. 1 minute is going to complete, and then the next bar is going to start. So each bar is 1 minute long. It's an M1. M5 is, hold on a second, gang. Let me just take care of something here. Okay, so M5 means every price bar is 5 minutes long. And as I recall, you have your open, close, your high, and your low of the wick. All right, remember that. You have green candles or blue candles. Okay, you can do green or blue. Okay, or any color you want. Bottom line here, David Estrella, if prices are going down, just remember, this is the open, this is the close, okay? Now, every bar is 5 minutes long on M5, and M15 means every bar is 15 minutes long. And as you go through, it's a 30-minute chart. H1 means hourly. So an H, which is an hourly chart, which you have each bar is 60 minutes long. You got a 4-hour chart, daily, weekly, monthly. A monthly means that each bar takes 1 month to complete, okay? 1 month to complete. That's funny. Look at the monthly and then look at the 5-minute. They literally look alike. See that? Look at that. That's right here is about 8 months. Right here, it's about 8 minutes. All right. So keep that in mind. Okay. Can you guys hear me? Or can you guys hear me clear? Okay, so Hector Dallo is saying that the audio is horrible. Hector Dallo, you know what? Maybe you need to improve your audio. Maybe get a better audio connection. Maybe get a better internet connection or a better computer or better earphones. Okay, my friend? But the audio is fine. Okay, the audio is fine. We're good. So let's continue. So now somebody asked about the trend lines. Okay, somebody asked, you went from smashing audio's horrible 6 times to okay. See, Hector, you got to ask. Is something wrong with the audio? Listen, we keep it interruption. He's in Afghanistan. Sidarian, you're in Afghanistan. God bless you, my friend. All right. So what we have here, guys, is somebody asked about the trend lines. Now, when you first put MetaTrader 4 on, this is what happens. Okay. All right. This is what happens. When you first put MetaTrader on, this is how it looks. Okay, so you start MetaTrader 4, you get all excited, you put a trend line, and this thing goes across like that. You're like, what do I do with that? You're on a mobile, my friend. So when you put on your trend line, you're watching all these gurus on the computer, and you're like, oh, well, I'm going to do the same thing. And then you're like, what the heck is this? So all you're doing, I know what you're saying, David Estrella. I know what you're saying. Okay, all right, listen, guys, and it's my bad, right here. All right, see this? David, see right here, that's a green bar. The green bar is where the open and close are the same. David, I am so sorry. All right, I see what you're saying, my friend. All right, I see what you're saying. All right, the green bar is so where you have it where you see a green bar, figures now that I want to do it, it's not there. Yeah. All right, let me get back to where I was. Trend line, right here. It looks funky, right? You put it on, and so all you do is you right click on it. You left click twice. It gives you those dots. You right click, all right? Right click, trend line, and I'm recording everything, guys. We're recording tonight. We're getting better and better every night. Trust me, we're getting better and better. The first night, a little bit of jumpy. We made some trades. We had some good profits. Last night, we put some good calls out there. The EUR CAD is exploding. We had the EUR. We had several things. You still have the GBP USD in action, just taking time. Don't worry about that. Tonight, we gave you the USD, NZD USD. That looks like it's working out a little bit. So we'll get back to all that stuff, guys. So right here, one more time, you right click. Right? You see the double? Left mouse click, right click, trendline properties. Right here, make it thicker. Do whatever you want, guys. This is your life. This is your world. Uncheck it. You want to make it a different color? Let me tell you, David Estrella, you like purple bars, you put a purple bar. So see how that is? Where it's like this, you can move this around. When it's like that, you can move it like this. When it's like that, you could do this. When you double click, there's nothing you can do. Double left click, you can move it around how you want, okay? Now remember what I said, when you do trend line analysis, you go from the higher the bar to the higher the bar, okay? For example, higher the bar to higher the bar. You do not do this. You do not go through the wicks like that. I mean, you do not go through the wicks like that. That's improper, okay? That's improper. Wait a second. Hector Delot, you can hear me. You can hear me now, man. Don't worry about it, my brother. I love you. I'm in mode right now, all right? All right, listen. Somebody says, what if it cuts through the wick? No, that's not a proper trend line, okay? That's not a proper trend line, right? This would be a proper trend line. See that? See the wicks? That's proper. This right here is not proper, okay? Do not go body to body. What did Biggie say? Body after body? No, I'm not going to get into that. Okay, let's get back to what we are. So the wicks, you basically going from high to high or from low to low. Like that. That's proper. You do not go from, through the wicks into the bodies. This is not a proper trend line. That's not a proper trend line. This could be a proper trend line. Let's take a look. All right, like that. Okay, I see right here, right? These are proper because you're coming right at the highs of everything, right down. That's okay. So how do you trade off trend lines? You can do that. You can definitely do that. There is nothing wrong with that. If you feel that, for instance, let me just let's find another chart. Wait, let me just here. If you feel that you want to trade off a trend line, that's fine. For instance, if you have your trend line is here, or a line is here. Actually, one thing about MetaTrader. Let's just say you had this as an example. All right, your highs, and you thought the market would come up. There's nothing wrong with you putting a sell limit up in the area, and that way it's equivalent to the trend line. So if the market does get there, all right, but let me just remove this. Okay. For those of you that have been trading with us this morning, those of you guys that are late, you should have been here. You should have been here at 2 o'clock in the morning, not show up late. All right, we got some trades going on. We got some good things happening here, guys, this morning. Right now, the NZD USD is trying to hold and trying to move higher. We gave a buy right around this area right down here. Your stop loss is below. And we're watching to see, hold on. We're watching to see if this can go higher. We also gave an update on the EURCAD. Yesterday, we gave a buy down in this area. All right, we gave a buy down in the area down here. All right, not that one, not that one. All right, we gave a buy down here on the EURCAD, and the market has turned up since then. Let me just fix this. There we go. So for those of you that have been watching, we basically gave you an exit right here, half of your trade, and we showed you how to exit half, putting your stop loss at break even for now. All right, we had other trades going on, but they pretty much have completed themselves and they've continued on. Something where we talked about the MACD, where you see the market doing this, guys, right? The market's doing that. The market's correcting down. If you look here at the MACD, you see how this goes up and is coming back down. So you're looking for this to eventually turn higher. So right now you're watching to see if this market wants to hold and turn higher for you. All right. So guys, you're in the market right now. You are in the NZD USD. And what we're doing is we're going to take your stop loss, and we're going to take the stop loss and we're going to say stop loss at break even. Okay. So those of you that took the trade with us early this morning, those of you that are with us this morning, I know some of you guys wanted to sleep late. You didn't think it was important to show up. That's your fault. All right. You should have been here. If you would have been here, guess what? You'd be in a positive trade right now. So here is your thick trend line. Okay. You don't affect the market by buying or selling. You do not affect the market by buying or selling. Get that out of your head. All right. The other day I went off on the market maker stuff. I'm not even going to talk about it. The guy who sells it, he sells it, is a good man, and that's it. I don't want any drama out there. And anybody that's out there probably talking bad about me, I tell them I love him, okay? Just tell them I love him. Tell them, you know what? You're driving me traffic. Stop talking about me. You're giving me traffic. When you talk about me, you give me traffic. All right? Stop talking about me. You got people out there, yeah. Hey, Francisco, you want to laugh? I had about, 6 or 7 guys from my company here. I showed them basically print a big screenshot right here, bank statement. All right. What else do we show them? Trades. I think we did $2.5 million worth of one trade that we did. Right. Whoever was here with me. All right. I'm not notional, not that 1,000 times leverage. I'm talking cash. All right. Somebody made fun that I live in a hotel room. I, it's a condominium. What are they? The stuff I hear, guys, you have to laugh. So let's get back to the story. But number one, those of you guys that wanted trades, you came here to get trades. The problem is if you came after 2 o'clock in the morning, guess what? You missed this trade. So let's take a little peek. Let's take a little gander what's going on. All right. It's only up about what, 10 pips or whatever. But let's see if this starts to kick in. Guess what? You go home profitable. You got to be hungry. So guys, let's get back to the charts. I just want to take a little break from them. Now let's get back to the charts. So what you have here, what you've learned today so far is you learn how to create, all right? Okay, and at the bottom left, see the bottom left? You could type in GBP USD, right? It changes the chart, GBP USD. Up on the left, up on the top, go to Market Watch. You see Market Watch? Right click, show all, okay? Then I like to do this. Right click, symbols, and that gives you this box. Okay, so you're right clicking a lot. So guys, pay attention to me. Right here, Chinese, we don't want that. We love them, but we don't want it. And don't tell me you don't like Chinese, because you got to eat Chinese food. It's a staple. It's an American staple. So I like Chinese people. All right, so right here, Forex 6, I hide that. Forex 5, we can keep it. All right. Now, there's some people who have the belief that only look at the pairs, and the pairs are USD, that have the USD in them. For example, while we're over here, some people are in the belief and the love that you watch only the pairs, which is EUR USD, GBP USD, NZD USD, USD JPY, USD CHF. I don't know. There's maybe one more there somewhere. So anyway, USD CAD. So EUR means Euro USD. So if we take a look at that, let me just left mouse click and drag over. You see what I'm doing is I'm teaching you how to use it as we're teaching what it is. So where you have the Euro USD, if you look to the right, it says $1.7298. So if you go to the currency exchange, there we go. We're going to talk about it. So if we go to the currency exchange, or you say the euro is going up or down, what that means is that the euro is the price in dollars. So which means that 1.07. To get 1 euro, 1.07. Okay? Here's your NZD. You buy it at 66 cents. You see that? You could buy the euro, the NZD at 66 cents. Here, GBP. It costs you $1.46 to buy the euro. I mean, to buy the British pound. And I'm telling you, if you don't think that's expensive, go to England like I did and pay $6 for a cup of coffee. Here's another example. You see this, guys? You see this? We have the wicks. People actually do it like this, okay, with the fat part and all that. That's not a proper way to draw a trend line. The proper way to draw a trend line is like that. All right, proper way to draw a trend line would be this way. Okay, that's a proper trend line. This is not a proper trend line. Don't ever do that, okay? Because if you look at the price bars, all right, if you look at the price bars, that looks weird, all right? So everything's based originally on price bars, not on candlesticks. So what you have here is when you go to a currency exchange, and let's just keep that on the GBP, When you go to the currency exchange, and let's just say you want to go to England. Hold on a second. You actually have people here. That's where the webinar is from 2 a.m. ET to 4 a.m. ET. Here in this room is 8 a.m. ET to 12 p.m. ET. Guys, I don't understand how my members, who are my members, went to our live room that they pay for when I've been sending out emails with the link for GoToMeeting. How do you F that up? How do you not click on the link? How do you end up in my live room? I'm serious. I can't even show you because people, they're actually in there waiting for me to start. I'm like, are you serious? And that's like 4 people already. They're asking me if we're buying the, they're in the wrong room. You guys, you are, you are all in the wrong room at 2 a.m. to 4 a.m. They're sitting there having conversation. That's hilarious. Emery Holmes, Wealth Club. I love Emery Holmes. I love Wealth Club. I love Darwin. I love Chino. I love the whole crew. Those guys are absolutely amazing. Darwin Pips is my man. Emery, I love you, brother, man. I'm glad you're part of the family. So, guys, we gave some trades early on. We gave the NZD work, and we followed up on some other trades that we have going on for the past yesterday. But anyway, look, I see all the need we have to have it, the basics. You're not getting the basics. We'll do some basics Wednesdays and Fridays from 2 o'clock to 3 o'clock. Fair enough? Yeah, don't go back to the live trading room. Stay here. Oh, my. I can't, look, guys, I can't even make this up. I'm going to show you. We're gonna go gander. Hey, wait. You see? They're in the wrong room. Look, they're asking me if we're trading this. They're like, hey, everybody, good morning. Is anybody here? How did they end up there? You're in the wrong spot, guys. Bring it back. Bring it back. Bring it back. I can't make that up. I can't make it up. I can't. It's too funny. I can't make it up. So when you're looking at and we break it up a little bit, we'll come right back. So when you look at currencies, basically the pairs are the USD that are tied into the each other. So you have major pairs: the USD, which is the US dollar; GBP, which is the British pound; the EUR, which is the euro; the NZD, which is the New Zealand dollar, sometimes called the Kiwi; the EUR, which is GBP. Nope, 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 nope. Down here. USD CHF. Okay, that's the Swiss franc. Why they call it CHF, I really don't care. I don't care. All right. USD JPY. Why? Because we like you. MOUSE. All right. And then you got the AUD USD, the USD CAD. Those are your pairs where the USD is connected, whether it's a dominant or it's not. They're connected. Those are called pairs, where it's directly with the US dollar and a major currency. Now, where you have what's called a cross, essentially you're taking the EUR USD right here, the EUR JPY. You're taking the EUR USD and you're taking the USD JPY. Those two right there, all right, there's a mathematical calculation. You put them together and you come up with the EUR JPY. That's called a cross. So essentially you're crossing the EUR USD with the USD JPY. That's called a cross. AUD CAD, the AUD USD, the CAD USD, you're crossing those two and coming up with a new price. And what that means is that it costs 99 Canadian dollars to buy 1 Australian dollar. That's all it means right there. Okay? 99 cents, okay? It costs them 90.99, whatever they call it. I don't even know if they have cents and pennies in Canada. All right? And why do they call Canada Canada, Canadian? Why do they do that? That doesn't make sense. Anyway, we had a guy here last night. I'm not sure, or a lady. We're talking about the Australian dollar, and she posts into the room. I can't even make this up. I don't know if she's online. She posts into the room, and she says, I have 2 kangaroos fighting in my back door. She was actually from Australia, and she was telling us, okay, there's no pennies in Canada. So Michael Essex, you're in Canada. Then how do you get below a dollar? There was somebody last night. All right. She's like, there's 2 kangaroos fighting at my back door or knocking on my back door. That was weird. So, okay, let's continue. So let's talk about buying and selling. All right. Let's talk about buying and selling these markets. Okay, you're getting right now, you're getting a 1 hour crash course on the markets, and then I'm going to send this out to everybody who wants it. Or I'll put it on Facebook. So if you're part of iMarkets Live, great. If not, tomorrow night, just ask me. Well, whatever. I'll put the link somewhere. I'll figure it out. Ask the person who brought you, who referred you, and then they'll get you the link. But it takes a few hours to put everything together. Okay. So there we go. Now we want to look at view terminal. Okay, let's get rid of that. Let's get rid of this. Let's talk about trading, the different types of trades you can make. Different types of trades you can make. So you can just buy right here, buy. You can do that. Little X, you exit. You could sell. Little X to exit. Simple. You buy it, X, you exit. All right, so let's do this. Let's just, for all intents and purposes, let's put it at 1 right here. So when you look at, I'll put this one up on, you know what? I'll put this one up on the public YouTube channel. No problem. And I'll also put it in Facebook. I'll take care of it for you. Tomorrow night you'll still have it. Okay, so make sure you come back to Christopher. So where you have right here where it says 1.0, that is called that's a lot size, LOT size. So where you have this right here, and let's just buy, that would be considered you buying a standard lot. You have 3 types of trade lots. Okay, and we're going to go through that. Okay, and then you have, okay, so down at the bottom, let's take a look at what we did. So right here we have 1, that's a standard lot. Number 2, that's a mini lot, and then 3, that's a micro lot. So 0.01 is a micro lot, and that's equivalent to $1,000 in market leverage, which means that you're leveraging $1,000 for a small deposit. So there's different companies out there. There's Traders Way, there's FXCM. I'm going to base it on FXCM, okay, or Forex.com. In the United States, 50 to 1 is leverage that is given out. When you have some of these other companies, whether it's Talonx or FX Broker Inc., all these other brokers, Traders Way, they give higher leverage. Really, in the U.S., 50 to 1 is legal or permissible. I'm not saying it's illegal, but it's permissible. Now, when you're outside the U.S., you could do 100 to 1, 200 to 1, 400 to 1. And a lot of these brokers, they deny anybody from the U.S. to participate in that. There are brokers, for instance, like Traders Way, that allow you to choose the leverage, whether it's 50 to 1, 100 to 50, or 500 or 1,000 to 1. And what that means is that when you put money in the market, and I'm going to get to risk in a minute, when you put money in the market, so for instance, let's just say you have 50 bucks, okay? You have to think of it as 1,000 times that 50 bucks. They're giving you 50,000, to work with. It's dangerous to somebody who doesn't know how to use it, okay? It really is, and we'll get to that. But understanding the lot size, you have a micro, a mini, a standard. A standard means you're leveraging right here $100,000 in leverage. It's equivalent to $10 per pip. Right here on the screen, okay? All right, on the screen, the 4th digit over. The 4th digit over, so 1.4644, that 4, when it goes up and down 1 time, that's equivalent of a pip. The last digit, the 5th digit, is called a sub pip. So you have pips and sub pips. So in this case, you have the GBP USD. You bought it, and it's up 4 pips. You see that? 4.5 pips. 4 pips right there. Okay. Now, the mini is 10% of the standard. So when you look at the 4th digit, it's not $10, it's now $1, and then the 5th digit is 10 cents. So you could see it's up 2.1 pips. Then you got the micro. Okay, the micro means that the fourth digit is 10 cents, the fifth digit is a penny. Right here, you're up 1 pip, roughly, or 0.7 pips. So that's essentially what that is. All right. Yeah, exactly. 0.01 is 1,000. 0.1 is 10,000, and 1.0 is 100,000 in lot size, in trade size, what you're using. Now, when you're using a U.S. broker 50 to 1, essentially they give you what's called margin, the margin requirements. So to buy a standard lot, it costs you $2,000, and you're getting 50 times or $100,000 in leverage. You have guys, the brokers, they're giving you, 1,000 to 1, so it costs you like $100 to do a standard, and that 1,000 to 1 is 100,000. So it costs you $2,000 with the U.S. broker, and you're getting that 50 to 1. 1,000 to 1 is this same thing that costs you $2,000 will cost you $100, and then you're trading that same 100,000, 1,000 to 1. So, but if you look on Trader's Way site, and let me just pop it up here. All right. You look on Trader's Way, and it is important, guys, because I had somebody yesterday tell me they blew up their account. It wasn't my fault, but they blew up their account. They have 1,000 to 1. They're just trying to be like everybody else, and I don't want you. I want you to be who you are. You don't need to be like anybody else. Let everybody be who they are. You be who you are. So right here, where it says new to the market, you see that? Risks. So Trader's Way is giving you 1,000 in leverage. They're giving that to you. But they also say risk. And they're saying, essentially, that you should not, right here, observe capital management rules. These rules are to restrict losses in every position. Most importantly, your losses should be no more than 2% of your deposit on every position. So where I'm sitting there telling you, don't risk more than 2% or $20 per thousand, and you're sitting there going, ha, 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 you don't know. I got Trader's Way. I got 1,000 to 1 leverage. Yeah, okay, I get it. That doesn't mean you risk 1,000 times your account. That means you adhere to 2%. And I'll get to that, Nick. I'll get to how you do that. But Trader's Way itself, who gives 1,000 to 1 leverage, and they're pretty bold about it, right? Maximum leverage, 1,000 to 1. So you could buy a standard lot for $100. But here's the deal, guys. I really want you to look at risk in this regard. Is when you look at the market, you want to take multiple positions. So let's just say you have $5,000 in an account. Well, you really are limited of what you can do with the U.S. brokers. They give you with the U.S. brokers, they're giving you 50 to 1, which means that it's, for the GBP, it's costing like $3,500 for a standard lot, but yet it's costing $150 for a trader like Trader's Way. Where it comes in handy, you can take a trade on the GBP USD and use 2% of your account balance. So if you have $1,000, you actually can use the right risk, the right trade size to risk that $20. What the leverage does for you is, let's just say you get a trade that's working. Let me show you. Let me show you. All right, let's go back here. EURCAD yesterday. You have a trade that's on, right? Let's just say this costs, $3,000 per standard. You know what? If you only have $3,000, you're done. On Trader's Way, this may cost you $200. So where the leverage comes in is that you could let this trade ride now, and you could put on other trades. You have the leverage, you see? But on the U.S. brokers, they keep it tight and limit you. That doesn't mean you have to put 5 standard lots on a $500 account. That means you have the leverage to continuously build out your portfolio, so that could give you multiple trades going on, and each trade have small risk. You guys follow me? let's see what's going on in the world of trading here. So earlier we looked at the NZD USD. All right, we have a stop loss in there. But let's get back here, and I'm going to end this class tonight right here and now. I'm going to stop the